Imagine a world where a handful of families quietly shape the wealth, politics, and industries of the United States, all while staying largely invisible to the public eye. For centuries, five elite families, the Rockefellers, Morgans, DuPonts, Bushes, and Mellons, have maintained a web of influence that touches banking, energy, defense, and even government policy. Their power is not just financial. It is structural, embedded in the very framework of the American economy and politics. The things you are about to learn are rarely discussed openly, yet they reveal a pattern of influence, manipulation, and extraordinary privilege that has persisted for generations. The Rockefellers, beginning with John D. Rockefeller and Standard Oil, established a model of monopolistic control that extended far beyond oil. Through foundations, banking connections, and strategic investments, they shaped regulatory frameworks, influenced universities, and guided policy decisions that favored their interests. Similarly, the Morgans built a financial empire that became integral to both domestic and international credit systems. J.P. Morgan and Company was central to financing both world wars, often deciding which nations received loans and how the global economy operated, all while maintaining private wealth that grew exponentially with each conflict. The DuPont family controlled chemical production and weapons manufacturing for decades. Their involvement in explosives, munitions, and later synthetic materials not only supplied wars, but also created new markets that consolidated wealth across generations. By aligning industrial production with government priorities, the DuPonts ensured that public spending effectively subsidized their enterprises. Similarly, the Mellons became influential in banking, steel, and tax policy, often benefiting from legislation and political connections that enabled them to expand their holdings with minimal scrutiny. The Bush family, intertwined with oil and banking interests, represents a modern extension of this pattern. Their corporate and political networks allowed them to influence energy policy, defense spending, and foreign interventions. Decisions about oil contracts, military engagement, and infrastructure investments often coincided with family-linked financial interests. Over decades, these families have consistently positioned themselves to profit from crises, wars, and economic shifts, creating a self-reinforcing system of influence and enrichment. These five families do not operate through obvious public manipulation. Instead, they rely on institutional control, interlocking boards, political access, and strategic philanthropy. Foundations and think tanks funded by these families influence policy debates, media narratives, and educational agendas, shaping perceptions while safeguarding private interests. The public sees the philanthropy or the corporate success stories, but rarely the hidden connections that ensure these elites remain at the top, regardless of economic cycles or political changes. History provides clear examples. During the 20th century, these families benefited from financial crises, wars, and industrial expansions. They were involved in structuring loans, directing government contracts, and controlling key industries, from oil and chemicals to banking and defense. Each major conflict, from World War I to Iraq, created wealth for those who were already positioned to exploit it. Ordinary citizens bore the cost through taxes, debt, or economic instability, while the elite networks accumulated billions. This pattern is consistent, systemic, and largely invisible to public scrutiny. In the modern era, these families have adapted to new forms of influence. Their power extends beyond oil, banking, and chemicals into technology, media, and global finance. They leverage interlocking corporate boards, private equity, and venture capital to control emerging industries, ensuring that innovation serves both profit and strategic interests. Even as public attention shifts, the mechanisms of influence remain. Decisions about government contracts, regulatory approval, and financial investment often coincide with private gain. The elite network effectively directs the flow of capital while maintaining a veneer of legitimacy and philanthropy. Political connections amplify their reach. By supporting candidates, influencing policy, and embedding allies in key positions, these families ensure that government priorities align with their financial interests. Defense contracts, energy policy, tax legislation, and even international trade decisions can be subtly guided to benefit their holdings. The result is a system where public resources, global conflicts, and national priorities are often leveraged for private accumulation. While wars, recessions, or pandemics affect ordinary people, these families are positioned to profit, often exponentially, from the same events. Crisis exploitation is a recurring pattern. Financial downturns, wars, and industrial disruptions are not simply challenges. They are opportunities for these families. By providing credit, controlling critical industries, and influencing government policy, they can purchase assets at depressed values, secure favorable legislation, or expand into emerging markets. During the 2008 financial crisis, for example, investments in banks, hedge funds, and government-linked enterprises allowed already wealthy families to increase their influence and wealth while ordinary citizens face foreclosures, unemployment, and austerity measures. Technology has become a new frontier for influence. Investments in AI, cybersecurity, data networks, and high-frequency trading allow these families to shape markets, control information flow, and develop tools that provide both financial and strategic leverage. By positioning themselves at the intersection of innovation and regulation, they ensure that new wealth generation remains concentrated and largely inaccessible to the public. The narrative of opportunity and competition often masks the reality of pre-existing advantages, inherited networks, and access to decision-makers. Philanthropy and public-facing institutions serve as another layer of control. Foundations, think tanks, and university endowments funded by these families influence education, research agendas, and public discourse. While promoting social causes, they simultaneously protect private interests, ensure generational wealth retention, and guide policy indirectly. The combination of private wealth, political influence, and strategic philanthropy creates a network that is virtually impervious to economic cycles, public opinion, or regulatory oversight. The ultimate effect is a system of power and wealth that is both subtle and profound. Ordinary citizens may notice corporate consolidation, rising inequality, or political lobbying, but the full scope of influence remains largely invisible. The same families who controlled industrial empires in the 20th century now control financial flows, technological platforms, and global policy levers. Crises, conflicts, and economic shifts continue to generate wealth and reinforce their position, ensuring that the hidden mechanisms of power remain effective across generations. The shadows they operate from are deep, the patterns enduring, and the implications for democracy and economic fairness are significant. In short, these five families are not just historical footnotes. They are active architects of modern wealth and power structures. By combining financial acumen, political strategy, and technological foresight, they maintain an influence that few fully comprehend. While the public sees headlines, wars, market fluctuations, and philanthropy, the hidden network quietly shapes outcomes to benefit a select few, perpetuating cycles of wealth accumulation and control that have lasted for over a century. Understanding this is essential to recognizing how influence, privilege, and economic power are maintained in America today.